Monday's market closes mostly lower except for the hog sector. Joining us with analysis is Arlen Studerman with StoneX Group. And Arlen, risk-off day in the outside markets that really did spill over into the commodities sector with some kind of poor economic news out of China.
Yeah, the equities were able to bounce back. The stocks or the commodities tried to come back, but never really could turn things around. Worried about slower demand coming out of China as their economy continues to struggle. They just barely missed contraction in the last quarter. The opportunities there for them maybe to have contraction this quarter. COVID numbers are still going up. They're still having a lot of restrictions, still a lot of lockdowns in some areas, and a lot of problems for the economy, a lot of uncertainty. In fact, even the Taiwan story is getting a lot more play there and is creating a lot of fear when we talk to our people in China. And just the way it's being talked about there, that creates uncertainty, so they tend to buy differently at the grocery store, even buy less at the grocery store. That has the funds worried. Now, that tends to result in less energy, still similar amounts of food, and the funds really haven't figured that out yet.
We didn't see any flash tenders today from China, but they did buy quite a bit last week. Are you concerned that China will actually stop buying because of these U.S.-China trade tensions over Taiwan?
I think it's a legitimate risk. To this point, China has tried to separate out their tensions with the United States with buying their commodities. I say that they have been diversifying. They've been trying to move as much business to Brazil and elsewhere as they can. Ukraine was one of those options that is very limited now in ability to export. Brazil, they're really investing now in trying to strengthen that relationship, being able to import not just soybeans, but corn now this year, as well as soy meal. The soy meal agreement, I think, is only as a backstop in case things really get rougher and they choose to, or we sanction them so they can't buy soybeans. But I think they're getting all their options laid out just in case things do continue to deteriorate.
So the other part of the risk off was a little more favorable weather forecast. The year on the GFS kind of more in agreement on a little bit more moisture in some of those key dry areas. What are you seeing, and do we need to see a lot more risk premium taken out of this market if those rains do materialize?
Well, the funds will take things too far in both directions. And so if they see rains and they get the perception that the crop's going to be fine, they will sell things too far to the downside. Same time, if all of a sudden we get indications that the crop is hurt more than we thought, they'll probably buy it too far to the upside, and then it'll collapse very quickly before we really have an opportunity to take advantage of it. So we'll probably see a lot of volatility. The real key is soybeans can add bushels later than corn. So I think next week's Pro Farmer Crop Tour is going to be critical for really getting pod counts. We can add a lot of pods late and fill them. And so we want to hear how well that is happening. Also on the corn, we're not going to add any ear length anymore. We're not going to add any more pollination. All we can do is add to kernel size now it's there. How many kernels are there? How much damage did we do earlier? That's what the crop tour needs to give us consistent messages on. And then it comes down to kernel size. And ultimately, I think that's going to be the big deciding factor. How long are those corn kernels going to be? That has a big direct impact on yield. How big are the beans going to be in the pods? Right now, my biggest concern is corn. And we'll see how that plays out, because every percent lost production this year really matters in a tight balance sheet year.
So putting that into the context of the WASDE report, obviously we saw a lower yield figure on corn by 1.6 bushels per acre, but the surveys were taken as of August 1st and crop ratings dropped from that point in time. So is that crop getting smaller, do you think?
The expectation is the corn crop's getting smaller. The question is how small, and kernel size is really going to determine that. We won't really know that till September and October. Pod size we can still add, but you're right. On the corn crop, I think that expectation is it will probably end up somewhere in the low to mid 170s. My bias is now toward the low 170s. There are a few estimates out there who have dropped below 170. I think it's a little presumptuous to do that yet. I don't think we really have the data to back that up, but we can't rule that out if we continue to stress the crop over enough of the area of the Midwest.
So soybeans a record crop. Does the big crop get bigger, or do you think there again, these crop ratings are below last year? Do we see that yield get pulled back?
Oh, the crop ratings are close enough to the long-term averages that we really can't rule out an above-trend yield. My bias would be to the downside yet, but we've seen some really resilient years where we get that late moisture. Remember years when we get some tropical moisture up into the Midwest, all of a sudden we add a bunch of bushels to the crop. That's still a possibility. Comes down to how many late pods we can add and how do we fill those pods. And we're just getting into that period now when that'll be determined with some rains. How widespread are these rains going to be? How much do we moderate temperatures? I think the temperatures for the most part are going to work in our favor, except for the far northwestern ag belt. It's going to come down to how much rain do we have, moisture do we have now to do the job.
Wheat setting back today, was that just because it was playing a follower role with corn and beans, or?
Yeah, it really is. Wheat really doesn't have the power to rally on its own right now. It's really range bound. We stayed within that range. We came off of our lows, but there's good support underneath of the market with all the problems we have in the world, including Ukraine, including problems the U.S. crop, including the drought in Argentina, et cetera, et cetera. But there's nothing compelling to say we need to rally above this level. We're feeding more wheat because of the high corn prices and the tight crop, the short crop in the West. But that's not really a factor playing into the market at this time. We're going to get some good rains in the southern plains next week, and that's going to help the supply situation.
Cattle kind of gave up some early gains. Was that just because of some profit taking, some routine profit taking? Because cash ideas are higher this week, and the Dow did rebound.
Yeah, it really did, and the cattle market didn't. We did see more strength in the feeder cattle market because of cheap feed prices, but even that struggled. And I think it's just a case where the funds are just reluctant to take things they wanted to any further right now. They wanted to sit back and let it consolidate a little bit, make sure that we had the cash market with us, looking at the composite, product demand, product prices and stuff, but we've got firm undertonings in here expecting that demand's going to go up ahead of Labor Day.
Yeah, and the funds are pretty darn long in that market already. They're also very long in the hog market. How much farther will they push that, especially now that we have October at such a big discount?
That's working in the favor right now as we're at such a big discount to the cash. It's expecting that supplies are going to go up and carcass weights are going to go up. But we've seen a lot this year when things didn't always happen as they expected. So we're going to be watching these couple weeks, see if those kills go up, see what the carcass weights do. And if not, it looks like we've got some room to catch up on the board. But that cash in the board's got a big gap to fill here over the next couple of months.
And it's been pretty counter-seasonal, that's for sure. Thanks so much for joining us, Arlen Suderman with StoneX Group.